Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday, May the 2nd. This will be our chart lesson for today. I'm a little later doing it today. I was in the market a little longer. I kind of rode this out and took a couple more trades up here later and it just took a while for them to work out. But a couple of things. Uh, this chart looks a little cluttered, and it is, and you normally don't want to keep your chart this cluttered, but there's a lot of important things here that I want to show you that I think will be critical. But I want to talk about a couple of other things first. I've gotten a lot of emails lately about people telling me, hey, I had a perfect two-legged pullback to the EMA and it failed. Why? Rules say that's what we're looking for. Or I had a perfect breakout pullback long and I took and it failed and I lost. Why did that happen? Well, I want to remind people we are not pattern traders. We are price action traders. And there's a difference between a pattern trader and a price action trader. And that's what's so great about being able to read a chart and understanding price action, because if you're just a pattern trader, patterns show up all over the place. You can find patterns all in here that are great patterns that we like to trade, but doesn't mean it's a good trade. What we want to do is wait for prices to get to certain places where we're expecting an entry and then find our patterns or our setups. So that's the difference. So just because you see a two-legged pullback to the EMA doesn't mean it's a good trade. It may be setting you up to trap you on the wrong side. Or just because you see a breakout pullback long or breakout pullback short, it doesn't mean you want to take it. And here's a great example right here. You got a nice two-legged pullback to the EMA and a second entry short right there. But guess what? You're not looking for a short. You're looking for a long. So they just trap people. But the people that are pattern traders don't know any better, because there's their pattern, and all they know is they enter on their pattern, and they can't figure out why it failed. Well, we had a channel up through here, and this is the first break, so we're looking for a retest of the high. That's why. Yesterday was a great example. Um, and this is the one I got a bunch of questions on. Let me find. I think it's this trade right here. Um, what we had was we had this bigger channel working down through here like so. Let me get the line right. And so that's our channel. And then you drag this down here, and guess what? There's the lows of your channel. I believe it's probably right there, and we just came off the lows. So now you're expecting prices to go to the high. So it's really dangerous taking a short right there. That's the main reason. But the second reason is it's not really a good setup. At least it's not on my chart. Look, you got one, two. You had two overlapping bars, two dojis. Normally that's not a terrible pattern if you're in a real strong downtrend and you're coming off the trend line or whatever. But the fact that we had this channel here, I originally had this drawn like this right here, and then and that may be right, because that gives you an overshoot, which really means you don't want to be going short right there. Now, if this thing was a runaway trend, maybe, but everything down here was fighting, and you could see it, and this is a little congestion there. We broke out, we pulled back, and then we go higher, and we had a little failed second entry. You might have been tempted to go short right there, and I talked about that yesterday. If you got trapped right there, when that ball reversed, you don't want to give this 2 points, because the odds are we're going to the upper side. And you could have even had it like that right there, but you still see we're still not to that trend line. You might have had it like that, but as of this point, we're not back to it. We're wanting to enter when we get back to the trend line, but the trend line is up here, so we don't want to enter. And that's all this is a move back to test the trend line. The trend line is not even there yet. I found it off the low side, finding these moves off the low. And like I said, I originally had it long through there, but I later adjusted it because it just looked better right there. Either way, it might have even been way up here, and we were overshooting it down here, but that's all the more reason you don't go short right there. So then we get the break of the trend line, and guess what? A move to the low. And you're also looking for your targets. If you remember yesterday, I told you there was one leg down there. There's your correction. So we're looking for our other leg like that, and I called that from I can't remember when the video came out, but obviously I had that target when we started going lower here. I was looking for that target, so just a little after 10 o'clock, and we missed it by 2 ticks. And you don't always meet the target. You'll get close. Sometimes you'll be a little bit short, and sometimes you'll be a little bit past. So once you start to get close and you start to see stuff like this, you probably just exit. You don't get greedy and try to get every tick, because look what would have happened if you gave it all back today and then some. So, but it's not magic. It's not, it wasn't luck that I knew prices were coming down here. It wasn't magic. The price action told me that because I know how to read it. And so you got to learn how to read it. And again, we're not pattern traders. We are price action traders. So you got to learn to read a price chart. And you're not just looking for patterns. You're looking for setups based on certain things we're looking for. And really at this point, you probably should have had this something like this right here. And you can see we had a break right here and then 2 legs down to a new low. So we were looking for a correction. Doesn't mean we're going to get a new trend, but we're going to get a correction that lasts at least an hour or so. So you got to understand every piece of this. You can't just come in and watch a few videos and realize some of the patterns that work real well and just start trading patterns. There's got to be a reason to enter the pattern. And so here's another one right here. But look at all that overlap and chop. That's a good reason. Even if you entered that second entry right there, it still worked. I'm pretty sure it did. Your entry would have been 82.75. Yeah, it worked easily. It got more than enough. If you entered right there, you might have got trapped. But look at all that overlap. Anytime you see 3 or more bars overlapping, especially if one of them's a doji, those entries are suspect, because what happens is prices, it's like a trading range. So it's just like a bigger trading range. There's one right there. Look, we broke out and we snapped back. But really, that's the retest from this trend line break up through here. So hopefully that makes sense. We're not pattern traders. We are price action traders, and we look for patterns to set up at particular places. And here's a good example right there. There's a second entry long that just triggered. Well, actually, we went a little higher there, but that's like a little 2-legged pull back to the EMA. But you wouldn't want to enter right here necessarily, not up there against all that resistance. We're looking for prices to probably turn back down here before long. But you can see the bigger channel here, and then you can see the little small trend, the little smaller channel that was working up all the way to the top of the channel. And then you can see the little trends within that, and you can see the rules working within that. And so that's why I draw all these lines, because they're all important. So just remember, we're not pattern traders, because you see a pattern doesn't mean that you want to enter with, on a second entry or a 2-legged pullback. You got to make sure it's in the right context. If we're trending up, we're looking for 2-legged pullbacks to the EMA and the trend line. And if we're in a trading range, you're only interested in buying the very lows or selling the very highs. And even then, you got to be careful, because notice here it broke out, but the bias was up. We had an upward bias. This was an uptrend, and we had a break, so we're looking for a retest. So our bias is upwards. You don't know when that's going to start, but at some point you expecting a retest of that high. That's how price action works, and I can show it to you over and over and over. Look at this little channel that was working back on this correction from the high side here to the low side of this channel. It broke, it pulls back on the retest, and it takes off again. And then you got a little bitty kind of channel-like thing here, and it might have even been more like that right there. And we get a little break right there, and we pull back and test it, and then we take off. You got one right here. You get a little break there, you kind of pull back and test it. And that's one thing on these smaller temporary trends. You won't always get a new low. You'll mostly pull back and test, get a double bottom, or you may go a tick lower, or you might even just get a pullback to test the trend line, like here and kind of here. So they're not as reliable, but they still work, and they still follow the same rules. And that's why price action works on any price chart and on any time frame, because it's the way price action works. It's universal, and it works on any chart. You can pick one up and see, and it works. So just remember, we're not pattern traders. We're price action traders. Okay, had a slight interruption, but it was kind of at a breaking point there. So again, yeah, it's just to wrap it up is that, and get on the chart lessons, that we're not pattern traders, we're price action traders. So what we are wanting to do is we're wanting to find patterns that we like to trade that set up at what I call key entry points. And the key entry points are when the market's trending, pullbacks to the EMA and trend line, and if the market's not trending and it's ranging, it's either selling the highs of the range or buying the lows of the range. And there's always, and the trend always takes precedence. So if the trend is up, we're looking more to buy the lows of the little channels. And if the trend is down, and see, a lot of people get confused and think that's a downtrend. All that is a correction in an uptrend. And if you know the rules and how to trade price action, you don't get fooled by that. So we know not to be going long. So getting caught in this little second entry short was, would keep you from doing that, because we're not looking for any shorts. And you notice I was here by 7 o'clock this morning. I took one trade around 7:30, and I sat here all that time until almost 9 o'clock. And that's what you got to do. You got to be patient. And, we're only looking for setups at certain places. And until I saw a setup at a certain place, I wasn't going to enter. So hopefully that makes sense to you. And but let's talk about the trades. Again, we've got a bigger channel, I believe, here. We've got a channel inside that channel, and then we had a little tighter channel here with a break and now the retest. But really looking at it at the bigger picture now, that the day's gone on, I don't even know that this channel was really, it's valid, but I don't think on the big picture, we just had a bigger channel right here, and where prices are working inside it, and you can see that. Look what's happened every time we've got to the top, and look what's happened every time we got to the low, which was just early on this morning. So there really was a long out of here if you wanted to take it, but it's not worth entering it. If you enter in that, you're going to get hurt in most cases. So, but let's talk about the trades. We'll move on. I drew the circles a little different this time. I made the outer edge darker, and I meant to leave the inner part lighter, thinking maybe that makes them easier to see. Let me know if you like this way better or the old way where the inside's darker and this is lighter. But maybe this will help see the entry points a little better, the actual bars. And I'll try to point out the bars too. But there's actually one other thing I wanted to mention, and we're already 12 minutes in this, so I'm going to try to rush through. But it's inevitable, but about once every week or two, I start getting a lot of comments or emails about, why don't you show any losing trades? You never show any losing trades. Well, the chart lesson is not to show my trades. This is not about my trades. The chart lesson is to show people how to find the entries and what they look like so that you can find them on your own. If I talk about my trades, it's because I took them. I don't always take every trade I mark. I don't always, if I did take it, I'll usually explain what I was thinking or what I did during the trade. But this is not about my trading. I'm not doing these videos to show you all my winning trades every day and to skip my losing trades. And so I can only show you a losing setup. Generally, if there's one that's real, that a lot of people could have got fooled, that was real hard to see, that maybe tricked me or fooled me, or if I did have a losing trade there, I'll talk about it. But the idea is not to show my trades, and it's not that I don't want to show you my losing trades. I'm not showing losing trades. I'm not showing my trades. I'm showing the setups, and if I took them, I talk about it. So hopefully that makes sense to you. The idea here is to teach you how to find the proper entry points using price action, to teach you price action. It's not to show you my trades or my winning trades or my losing trades. But if I have one, I usually talk about them. Or if I get tricked, I'll usually talk about how I managed the trade or what I did. You'd be surprised. I'm not even going to say, because inevitably I'll get 10,000 emails that says you're a liar. You're lying. But I don't have that many losing trades, honestly. You see how patient I am. I sat from here all the way to here. And I'm going to talk about this trade. I came within one tick of having a losing trade right there. And I'll talk about that in a minute, but it didn't look, I didn't have a loser. It worked. I usually kept my stop 2 ticks below the signal bar. It only went 1, so I missed getting stopped out by a tick. But there's other, and I'm a little more aggressive, so there's other ways to, I'll show you when we get into this trade. But let's talk about the first one. This was kind of news driven right in here. This whole big move was news driven. And, we had all this news that came out at 7:30, and this thing ran up. And you can see that's a two-legged pullback to the EMA and inside a channel, and it came right off the EMA and the lower channel bar. It doesn't get much simpler than that. You go long, and you didn't have a chance to use any limit orders or anything. This was news driven. As soon as that bar ended, you had to drop you had to have your stop up there. You had to drop a quick limit order. You got to be quick sometimes. But you had a chance to enter here, and it was a real quick, easy, no runner, you could have got a couple of points, 3 points out of that runner maybe, but you had to exit just as quick because it came back down really fast. And really what I did is I exited right in here. I didn't try to get that little extra. And I knew once we got above this channel, it's probably going to sell off pretty quick. And that's exactly what happened. You don't know that it's going to go. I really didn't think it'd go up there, but it did. It trapped some. It trapped a lot of traders. The price, because it went higher and then it turns down. And then I'm looking for longs, and you don't want to go long in this. It's not worth it because look, there's actually there's one leg up, a pullback, so there's a second entry long right there, and you would have just got trapped. But look at all those over. That's congestion. That's a tiny trading range, and you don't want to go long in a trading range or short. You just want to sit and wait for the right setup, a little trap down at the bottom. And I was tempted to go long right here because you got a little trap down here, but guess what? I didn't because of all the overlap right there. And if it would have broke above this bar, on this bar, I probably would have gone long, but it didn't. And then you got 1, 2, 3, 4, 5 overlapping bars. You got a strong high right there. You just had a big move down, and you might get a measured leg down that brings it back down to here before it takes off. So it's better off just to sit tight. But you don't want to be going short, really, because you're expecting a retest. So our bias is long, so I'm only looking for good longs. So I had to sit tight till right here. And the reason I like this long is because it broke lower first, and it turned higher, and it broke out the upper side. I used a limit order. I dropped a limit order right there, and I was able to get filled on it. But still, it only went 1, 2, 3, 4. It was like a 4-tick failure. And then it pulled back and it tried to go higher again, and it broke higher again. But then I could see that we probably had a little channel working down through here. And actually what I did, I originally had this line right here. I got it off the highs first, and then I drug it down to here, and that was a perfect bounce. So I liked that setup. So, but I had my stop too, and I probably should have exited on this bar. When this bar formed right here, that was a great place to exit because that was a good sign that, hey, there's too much resistance up here. We may pull back yet again, and we did. And luckily, I had my stop. You'll hear me say it all the time, I usually keep mine 2 ticks below the signal bar. There's your signal bar right there. And I usually keep my stop 2 ticks below that, and you see it went 1 tick, and it didn't quite get the second tick, and then it rallied on up. So I survived that by the skin of my teeth. But again, people will say, you got lucky there, but I've done this long enough to know that if you keep your stop 2 ticks, you won't get trapped out on these little 1-tick stops like this, because that's common. You'll see that a lot. Here's another one right here. Went 1 tick lower than those lows right across there, and then it turns. And you'll see that a lot. Sometimes they'll get you at 2 ticks too, but generally if it goes more than 2 ticks, you're probably in trouble. So, and you're probably better off just to exit. But 1 tick is a common trap, especially when you know you're looking for a retest. And it's springtime around here, and so I'm struggling a little bit with allergies. I get to talking a lot. My throat gets to tickling, so I may have to break away every now and then and clear my throat. I apologize. But later on, I kind of adjusted this line down to here. And this one I ended up adjusting up to here. and you can see that it fits better, and you will do that sometimes. But I found it originally off those highs right there. We were making higher highs, and so I drew that line and just drug it down. And so then you finally get that little one tick trap, that doji. So now you got a chance to get in at the low of a range. And that's why I left each of these lines on here. Let me show you this. You can use this for your targets. There was the first little trading range that we had. You can see the highs and the lows. And then so the next, when you break out, that's about what you can expect for the next one. And look at that. And then you got caught in this one. And when you break out, where can you expect the next one to probably go to? What do you know? Same place. And then you get caught in that one. So where are you looking for the next one? And even though it went right on through this one, it tested support, and it's still kind of, it couldn't get back below that. That's a good sign that prices are strong still. And then guess where the next one goes to? Same identical place. We ended up breaking a little higher, but now we know why we can't get through there, because there's a trend channel line there. So there's a reason I left all these lines on there, but I normally clear these off as we kind of go. But that's just another way to find your target and to know where you're probably going to run into more troubles as prices go higher. I'm going to leave that one on there because it's still pertinent. Look, we never came back and tested that one, so I'm going to leave it on there. It's still pertinent. We really never came back. I'm going to clear some of these off, and if we start moving back down there, I'll put them back on there. Matter of fact, I'm even going to take that one off just to clarify. But notice this little channel right here. I forgot, I think this is the last trade. We had the little break lower. Again, when you broke above that one, it was better off to try to get in on a limit order, and you see it pulled back, filled you, and then it shot up, and easy scalp. I should have drawn that one green, but this is the main trend line up through here, and this is just a minor one in a correction. So it's not as, this one's not as critical, but notice that we broke out of it and we still pulled back. So, but then you get a chance to enter right here on the next break higher, and that was a great one to enter on. It's right off the possible trend line. You probably would have wanted to, even if you hadn't adjusted it yet, you might have looked at that as a break, but you know you're going to get a retest. But as the prices trended on, you could tell it was really kind of out here, and people just weren't, we weren't real sure where prices were doing here, but we knew there was a retest. So, and you can see that line's held all the way up, and we're finding some more support off of it again. And so another good place to enter. This one I should have drawn in green because we hadn't had, but we really kind of had a break there, and now we got a new low. So I really counted that. That's why I like that trade. That's why I took it. When we closed back inside it again, I was a little hesitant to go long there, but there was really an entry there. But this was the safer one right here. And there is a little overlap right there, but you can't ignore that little trend channel break, the retest, and this bounce off this channel, and we're still looking for the high. So it's also a breakout pullback long, several different reasons to go long there, and that's what you're looking for. Reasons to get long at the EMA or the trend line, and there it is. That's a key entry point. These are your key entry points right along here. Same thing here. Then we finally get up here. We pull back, two-legged pull back to the EMA and the trend line, so you can't ignore that one. Then you get a little failed break lower there and a little trap, a second entry long, and that's counting off this low. Notice you got a new low here, so that's a little downtrend. So first entry long, pull back, second entry long, and look at that was the move of the day right there. And where do you exit? When it touches this line up here, that's where you exit. And yeah, it went a little higher. I didn't get all of it, but I didn't give it all back on this pullback here either. You could stay in this and wait till the trend's over to exit, but I like to exit and look to re-enter. That's just my style, but you can do it any way you want. And guess what? We get up here, another two-legged pull back to the EMA. You got a double, triple bottom across here. It bounces right off that EMA. When it broke above that little doji, I dropped a limit order there and entered, so I entered right there. It took this one a little while to work out. You got another little pullback right here that tests that trend line again almost, EMA, it turns up. So I even liked going long here, even though it's so close to these highs. The market's just been strong, and the odds are it's going to get that new high here. Um, and so, but the way you do this is you drop a limit order in here. I originally had mine right here, and it bounced on it about 10 times, and it couldn't get filled, so I moved it up, and instantly I got filled, and then it took a little while, but it slowly broke higher and went on up. And that's how I do that. If there's not enough room to get out here, I'll try a limit order. And there probably still wasn't enough room to get out, but I just really felt like we were going to make a new high, and my entry was 92.50, and it had to tick one tick through is all I had to do, and it didn't even really hesitate. Once it broke above that bar, it went right on up. So I was out fairly quickly. The wait was trying to get in to the trade. And you could look at what was happening on the bid and the ask, and most of the big hits were on the people buying and not selling. So I always watch, and you can see how fast they're clicking off here. Are they clicking off on the buy side or the sell side? And that's what that little blue and red line is. The blue is the buy side, or the ask side, and the low is the the bid side. So that's just another little clue of what you can be looking for. If all the buying is, if it's all buying and these things are rolling off in big chunks, that means there's some heavy buying going on. And if it's rolling off on the bid in big chunks, and there's probably some heavy selling going on. And don't trade on that alone. It's just another little clue. We're only interested in the price action. And this stuff, you can see this stuff every day. You have to be able to find what's going on. You have to find these channels and these lines, and it's just like learning to trade. It takes experience, it takes time, but you'll get better at it. But just make sure you understand that we're not pattern traders. So just because a pattern fails doesn't mean it was a great setup. If it wasn't at a key entry point, you probably shouldn't have been taking it. Just like right here is a great second entry short. But this is an uptrend. You don't want to be selling an uptrend. So it's a double top right there, and double tops are a lot of times really good trades. But you don't want to be selling in an uptrend. So you want to ignore that pattern. And if you're looking for a second entry long, the best ones, there's really a second entry long right there. Notice that. First entry, pull back, second entry, and it was right off the EMA, right where we had that support, and it really was a good trade. But it's really risky because you're up here off this upper side, just kind of like the one I showed you from yesterday. So you're better off to wait till you come back to here. This is where the key entry points where we were looking for setup. So I hope that makes sense. But that is a great signal bar, and I almost went long there. I'll be honest with you. I talked myself out of it. I said, no, you'll run up here, hit that one tick higher and turn down. But you really probably could have gotten in with a limit order and gotten out there. Well, you could have gotten in even with a stop, but I just didn't think it was a very good trade after that huge move up and a double top, and now a little bit lower low than that one, and that generally leads to a bigger correction, and that brings you to the one that comes right back to the trend line again. And that's where the key entry point, that's where we're looking for a setup, and it's not the best setup, but look, each time it was kind of like that. It took a few minutes to get it moving, and once it does, it takes off. Now look, you got a failed second entry long here, so you might have a short trap. My guess is we're coming back down here, and we may be done here now. We may be going to trend all the way back down to here, but you don't want to start thinking short until you get a for sure thing trending to the opposite way with proven trend lines. So but just remember that we're not pattern traders, we're price action traders, and we're only interested in patterns that set up where we're expecting things to happen, which are the key entry points, which are pullbacks to the EMA and the trend line, strong support, strong resistance, and those type things. So I hope that clarifies that. And then lastly, one more time, I'm not showing you the chart lesson is not to show you my trade. So if you're wondering why there's no losing trades that I show, I'm not here to show you losing. There's losers all over this page, but I don't know which ones people took and which ones people got. I mean, if you're not taking them at the right place, now if there's a setup like right here, where it happens at a where a lot of people would have got food, including me, then I talk about it. But again, I got lucky, as most people would like to say, because it only went one tick lower, and I got lucky to hang into that trade. Well, I planned it that way. Did I know that I wouldn't get stopped out? No. I could have. It could if it had went one tick lower, I'd have got stopped out, but it didn't, and that's why I keep it 2 ticks below the signal bar. And the signal bar on all of these, this is really your signal bar right here on this trade. This is your signal bar on this trade. This little doji right here on this trade. This is really your signal bar, but you didn't want to enter until this bar came along. Your signal bar again is a little doji. Signal bar here is this bar. Signal bar right here was this little doji. And remember how I tell you about repeat patterns? Look at this pattern. 3 times a day. Once, twice, 3 times. The exact same pattern. You get a little range, you get a 1 tick trap lower. This time it was a couple of ticks, and then boom, off it goes. Same thing right here. Notice those lows across there. 1 tick lower and boom, off it goes. Same thing. All those lows. A couple of ticks lower, boom, off it goes. Right across here. 1 tick lower, boom, off it goes. So I love those setups, those little traps when you're trending upwards like that, and you get these you go into a range and you get the trap, and what happens is they trap all the longs out, they trap all the shorts in, and then when they start hitting those stops on the shorts that got trapped in, it runs it, and then also the people that were long that got trapped out realize they got tricked and they have to jump back in, and that's what causes that huge spike like that, because they trick everybody and they all have to exit or add back on. And I love those traps. That little a double bottom like that with that tick or 2 lower is more powerful than a double bottom like this one. Notice how this one took off, but it didn't have that burst. And what causes that burst is it hits all the stops from all these shorts. That they go short here and they put their stop up somewhere up here, and they start hitting those stops, and all those shorts have to start exiting, and then all the longs that got trapped out, that their long stops, that their safety stops got hit, they realize they got tricked and have to add back on. And that's why I don't hang in. When it gets to my target, I exit and I look to re-enter and do it all over again. And you can see these repeat patterns happen. This one did it right here, I believe. Is that in 1 tick lower? That's early this morning. No, that's a perfect double bottom there. It looked like this was 1 tick lower. But you'll see those little 1 tick traps all over the place. So that's why I use 2 ticks for my stop below the signal bar. Just so, and here's one right here. Notice that low right there. Notice how we went 1 tick lower. Notice that low right there. We went 1 tick lower. This was really where I would have had my stop afterwards, was right here, because that's the lowest low. And so anyway, we're 33 minutes into this, but there was some good stuff, and I wanted to make sure I talked about all of it. And it's been a really good trading week. We're getting some movement now. Our one friend that laughed at us because we asked for movement and got it. I don't know what he thinks about our movement, but I think it's a great thing. So hopefully, if you're following the price action and you understand it, you're seeing that too. So. But I'm going to wrap it up for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.